Hello everyone and welcome to my daily reports market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday the 19th of March. Well, we have continued to see enormous selling pressure coming through markets. It's interesting that what we've got at the moment is this continued mass run higher of the dollar. What we've seen is the dollar index just absolutely shooting through the roof. Just incredible run higher on the dollar. You've seen swaps prices which have become just absolutely just blown out, and we're starting. Well, I say starting. We're seeing that the dollar is just absolutely tearing it up in the forex market. Sterling dollar 115, big figure, just remarkable level of selling pressure through cable yesterday. And sterling is not the only one. You've seen the Aussie dollar, the Kiwi dollar, both massively sold off. Even euro dollar has been coming down sharply, and we continue to see the pressure into today. Dollar yen going up. Why is dollar yen going up? Well, the reason would be the fact that the dollar is just a massive colossus of a currency at the moment, and it's pretty much the only thing that that anyone's actually buying. You see equity markets that continue to fall. S&P 500 5% down yesterday, 6% down on the Dow. You've seen the S&P futures today 2% down. So it's just relentless, just utterly relentless. The ECB has come out overnight and yesterday evening and said that they're going to be extending QE by another 750 billion euros. Markets barely even gave that an eye flicker. RBA, another central bank, cutting rates to record lows, and it's just relentless. The amount of monetary easing you're seeing, fiscal support coming through, but nothing is putting a floor under these markets at the moment, and it's just incredible to see. That we've got this ongoing selling pressure that's just coming through markets. You can see that through the S&P 500, which, as I said, continues to fall and just ever further into bear market territory now. Treasury yields starting to pick up. It's interesting actually that bond yields have been coming up in the last week or so. Treasury yields less so than other markets, but we have seen that as even bonds are being sold into, well, any sort of safe haven just isn't a safe haven unless it's called the dollar at the moment. Even the gold price is falling away. It's not a safe haven at the moment. The yen, yeah, against other currencies has been acting as a safety net, but ultimately against the dollar, dollar yen is moving higher still, another percent up on dollar yen today. So just incredible. Now, in terms of where we're looking at today, I mean, it almost seems ridiculous to talk about economic data at the moment, but I might as well give it a go. But we've got the Philly Fed manufacturing at 12:30. Actually, you've got three sets of data points today at 12:30. You've got the Philly Fed manufacturing, you've got the US current account, and you have the US jobless claims. Now, current account expected to improve to $109 billion on the deficit for the US. China, I can imagine, was possibly one of the reasons behind that. Jobless claims. Now, this could be something we need to start looking out for. Jobless claims going up. Now, jobless claims expected to be 220 this week. They were 211 last week. Now, given the economic turmoil that's going on, and surely unemployment is going to be starting to pick up quite enormously, you'd imagine. So watch out for the jobless claims, as that might spook the markets again today. And also, I didn't really get to show you, but the Philly Fed is expected to come back to 10 from 36. Now, what I will show you is this chart here, this purple line, which is the New York Fed. New York Fed was only expected to come back to, I think, 3 last week. It hit 21 minus 21. So I wouldn't be expecting the Philly Fed to be especially positive today, even though 36 was obviously, Philly Fed tends to be an outlier on the positive side. So if that goes negative, well, I mean, I think we can imagine what might happen there. So yeah, strongly negative signal possibly coming through there, fully fed if it goes negative today. So yeah, lots to still ponder, but markets are still under pressure. The biggest mover of the day yesterday was sterling dollar, and that is my chart of the day. Euro sterling having a massive bull move yesterday as sterling just got absolutely slammed against everything. Euro was sold into as well, but sterling got absolutely mauled, pulling euro sterling above 93.25. Now that is the highest you've seen. Let's put my 5-year chart on since 2016, since that Brexit vote. So we can go further out to 20-year chart, and we see that it's looking up towards levels not seen since 2008, 2009. So an incredible move higher. But is there signs of a turnaround? Well, question marks, because obviously there's a massive overextension of the bull run, massively overbought. Today's move started to roll over, perhaps. Is that a shooting star shooting star candlestick? Could well be. Hourly chart doesn't show a great deal apart from a MACD crossover signal, so you could see that is reflected in the near-term move. And you start to think about retracements. Obviously, after such a strong run high, you will often see a retracement, but how far can this retracement possibly go? Well, sterling's been absolutely smashed, and there is obviously rebound potential as the dead cat bounce sets in for sterling. But where would it go? Well, you've got initial support around that 93 big figure area, a little reaction low, 93.07 yesterday. 91.50 would be a ballpark area. I think that would be where Tuesday's high came in, but you can see that given the run high, 86 on RSI is record levels. Never seen 86 on the RSI on euro sterling, by the way. So obviously this is massive overbought territory, and if you do start to see an unwinding move, well, that's likely to be quite considerable, you'd imagine, on a technical basis, but no real sign on the daily chart yet of any correction. So yes, we are still looking as though that euro sterling is a key mover. 93.25, obviously initial support of the breakout. Below that, you're looking at 91.50 as a retracement move. But yeah, crazy times we live in. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.